Awesome, guys. Thanks so much for that update. Right now, we have another great guest that I'm looking forward to. Right now, we have Anne Reinke. She's going to be joining us right now. And of course, she is the president over at TIA. Anne, thanks so much for joining us this morning.
Thanks so much for having me. How are you guys doing? Concerned about this rail strike, I assume.
Definitely. It is definitely a situation to keep an eye out. What are your takes right now given the labor situation? I know when I used to be a broker, we did do quite a bit with intermodal, and possible disruptions could become a big headache.
For sure. I would say this. There are a couple things. First of all, I don't think we get to the point of a rail strike. I really do think Congress will act to intervene. I think President Biden's statement was really strong yesterday to say that there's no more deal making to be made. The deal is the deal, and he expects Congress to pass it. That being said, intermodal has been a very troubled sector of our industry. We have had the lowest intermodal loading since the bottom fell out of the marketplace back in the second quarter of 2020, this past third quarter. I tend to think it's because people are very concerned about reliability of service. They're concerned about the labor situation. They're concerned about the strike. And so they feel like they can't depend on the rail, being a solution for them, particularly when, we're here to solve a problem just in time. And so our members don't know if they can rely on intermodal. It will be good for America. It will be good for the economy. It'll be good for our members to have a more reliable situation when this deal has been struck.
And even if you don't see a strike coming in the future, do you see any shifts or any significant changes happening within the industry from those that may have been maybe looking to protect themselves or scared that there may be a strike?
I think you're absolutely right. Shippers, again, we weren't in a very peaky season, but we're still in peak season. And so they've got to protect themselves to make sure that their goods get to marketplace. So so there's some markets that have already made the shift over to truck if they can. Now, the larger commodities like your chlorines or your fuels, your petrochemicals, your ethanol, they cannot make that shift as quickly. So that would probably be waiting for the 5 days or so before the strike could potentially occur. But yes, the shippers who can and have the flexibility are already making plan Bs.
And kind of switching gears a little bit as well, there may be what looks like a third quarter market report. Are we seeing what's kind of on the wire for brokerages? I remember back in my experiences when changes in the market are opportunities for margin, but there's a lot of competition going on. What are we seeing right now from this third quarter information? Not yet released.
Yeah, you're exactly right. So yes, our market report should be released very soon. I know you guys can't wait to see it, but the market is softening. It's not declining. I would say, the revenues that we saw year over year are up 6%, but quarter over quarter slightly down. Again, the volumes year over year still up, quarter over quarter only up about 0.9%. There is an appetite still for industrial products. The retail products, so you guys cover as much as anyone, the sort of inventory glut, we're still having the impacts of that. So there's not the demand as there has been over the last 2 years for consumer products. We still are seeing industrial products moving, but it is a softening marketplace for sure.
And with those industrial products, one of the things that I'm always keeping my eye out upstream is that backlog situation. So of course, we're starting to see backlogs come down or start to ease, but really still industrial activity still kind of pushing forward. Do you anticipate that the industrial segment is going to have a little bit more of a runway just to kind of finish up some backlog work or work in process that has been started?
Yeah, I think you're exactly right. I think there is still more runway. As you know, there was such a raw material shortage. There was such an equipment shortage. There was such a heavy machinery shortage over the last 2 years. So the industrial side has a lot of runway to make up that shortage. So that's sort of one of the bright spots, I think, if you're looking at 2023, that need will still continue.
And I've got a question as well regarding brokerage market share. Spoke with a large carrier. We've seen it on earnings calls. They mentioned that what's interesting, their observations, brokerages are getting access to more contracted freight. We're seeing that shippers, because of the pandemic, are giving them a shot. Is this something where have you continued to see an acceleration in this trend, or is there the potential that shippers will try to pull back and move more towards carrier or other modes to get savings?
Yeah, I think you're right. I think there is a greater shift. And why is that? I think because if we've done anything over the last 2 years is we've proved our value proposition that we're not necessarily just there when there's no other alternative. We're there because we actually are specialists in trying to figure out what the solution is. And we do that because we have access to technology and we have access to relationships. And so I think, again, our industry has grown astronomically over the last 2 years. You probably have better numbers than I. The last I read were over 29,000 brokers in the space. And it's because shippers are continuing to rely on us. They see that we don't need to be used just for spot market rates. We can be used on a contractual basis.
And as we look, of course, going into the final few weeks of this year and going into 2023, and there are a lot of big talking points, of course, waning demand overall in the macroeconomy and interest rates starting to change consumer behavior and, of course, business and industrial behavior. Are there any underlying trends that aren't really kind of getting the same headlines right now that we should keep our eye on?
Gosh, well, I will say this. I was encouraged by the fact that shoppers went shopping on Black Friday. So that shows to me that the sort of consumer-based demand is still resilient. And interest rates are high for sure. And people, I think one thing we need to be concerned about is there's been such this labor shortage. And so, which has given people the confidence to go out and shop. I'm not sure how long that lasts. As you see every day, new headlines of companies who are announcing layoffs or potentially doing layoffs or freezing hiring. I think that to me is something that we need to be very cautious about. We have been very fortunate over the last 2 years to have government transfer payments and having the benefit of having jobs, accessible to almost anyone who would want it. But this is a trend I think we need to be concerned about. And that's my fire drill. So maybe that's what we're saying. We got to say goodbye.
Well, it's a pleasure to have you on. Be safe as well. Make sure to walk towards the nearest exit if possible. Thanks again for coming on.
That's right. Walk, don't run.
Thomas, that definitely was a hot topic, and I think she's spot on. I mean, we're looking at consumer activity. A lot of it was really pushed forward by that confidence and really thinking that, hey, I can just get another job, because that was really the trend throughout much of 2022 and really some parts of 2021 towards the tail end there. That is really starting to slow down here.
Exactly. And that's still the narrative. Joblessness claims, openings, job openings, and unemployment are such huge numbers. That's what makes it feel weird, because we see, like you said, it's a tale of two cities. Consumer buying power is degraded. We're not shopping as much. We're seeing rejection rates. But at the same time, where's the lines of, so it's very fascinating to watch. And I think that, get your popcorn out moving into Q1 2023. Holy cow, time flies, right?
It does, and I think that's the interesting aspect. I mean, we're looking at job openings that's at over 10 million, but I mean, really that's a lagging indicator. But when we look at hires, that's pretty much been slowing down throughout most of the entire year. So definitely going to be an interesting one. And of course, we have our next look at today's headlines with our very own Sydney Edwards.